Everybody, this is Jim at SP500chart.com. It's Sunday, early evening, a little after 6 o'clock, April 14th, 2013. We're going to talk about the S&P. We're going to look at what happened on April 12th specifically. And we're going to look at what happened over the course of the week that ended on April 12th. I want to remind you, tomorrow is tax day. Just between you and me, I wish the day after tomorrow was the day we headed to the polls to elect our congressmen and other government representatives, because I think the country would be a lot better off if we went to the polls the day after we paid the price for our elected officials. Instead, no, we elect them in November, and then we have April, and then after April we've got at least 6.5 months to forget about the pain we experienced on the 15th. But I'll get off my political soapbox and read this to you. www.sp500chart.com, and this video are for educational purposes only. Nothing stated at the side or in the video is intended to be used as investment advice. And look, hey, I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Starting off, we're looking at a 1-hour chart. Each candle on this chart represents 1 hour of trading. And let me make one small adjustment here so some of my lines line up a little bit better. This is the line I want to show you. This looks to be possibly a resistance line. Now, we've had various lines that we thought would be resistance. For example, this used to be support. Once it broke back in late February, we were expecting it to turn into resistance. Again, this used to be support. Now we expect it to be resistance. And lo and behold, middle of March, we saw it work as resistance. This line hasn't been broken yet, but it's just held the market back on 2 occasions. And it looks like this is where this past week's rally was, at least for the short term, turned back down. We'll see what happens this Monday. I could very easily see another stab up to that 1600 line, and I'm not going to tell you that the S&P is going to die when it hits 1600 or 1602, 1604, wherever the next little peak happens. But I will tell you this. I believe whenever this yellow line breaks, that here it is in broader context, when that line breaks, we should be in for a significant sell-off. Let me show you the last 3 similar yellow lines. Here's one. Look what happened. And we'll have to look at a 2-day chart so you can see that one. That one actually formed over the market bottom in March 2009, and then the summer swoon of 2010 rallied off that, but when that broke, it back tested, and then serious selling pressure. Then we bounced up, formed another support line. Once it broke, it back tested, serious selling pressure. Let's move in on a daily chart now. We had this line. Once it broke, back tested, pretty decent sell-off, nothing huge. Now we're in another rising channel. Here it is. And why would we expect anything else other than what has been historically shown to be the case? When this line breaks, I would expect there to be a pretty serious sell-off. And until it breaks, we just keep going up. So that's kind of been the line we've been watching for the past month, maybe a little bit more than a month. And I think that is a wise thing to do going forward. Let me show you a couple other lines real quick. We have some lines of horizontal support. We got that line at 1540. That, coming into this past week, we saw a bounce and we knew to expect at least a move up to the 1560s again. Getting up to 1596 was a bit of a surprise. But hey, this line didn't break. So when it doesn't break, why try to get too cute? Just hang with it. When it breaks, then make a decision. Looking at a 15-minute chart. Here we are. This was our Friday swoon that took place on the 5th. And we spent most of the day coming back up. And I mentioned that it looked like we may have a resistance line right here in a small descending channel that is highlighted by these two orange lines. And the word was, if this line breaks, then this sell-off is likely, at least for now, over. And on Monday, we spent about half the day under that line. Then it broke out over this descending channel, signifying we're ready to get back up. Now let me show you one thing that we did not do. We did not get a back test to this line. We really just zoomed up in what appears to my eyes to be a little bit of piling on, a little bit of herd mentality. So I think that's a good reason at this point to start to exercise caution and to keep an eye on the market. I'm not advocating sell here. I'm not saying that. But what I am saying, watch this yellow line. When it breaks, that should be the next significant leg down. And depending upon where that leg down finds support, it may or may not be another buying opportunity. We got to see just what starts to break before any projected future down leg turns back up. So I'm just, let's put it this way. We could be very near a significant market top. I made a couple comments in last week's video, and where we looked at a couple of other charts. We looked at the chart of Apple. We looked at the chart of silver. We looked at the S&P chart on what took place that formed the 2007 top. We're seeing some of those same things. We're seeing moves that are going out over what should be long-term trend lines. This is a fairly long-term trend line that I just highlighted there. And ever since March, we've been over that line. Now that is a rising line. And what do we know about rising lines? When you get over them, it's no problem. It's no difficulty whatsoever for the market to fall back underneath them. In other words, rising resistance lines do not turn into support with the same degree of reliability that descending resistance lines will turn into support. So, guys, all I can say in the week going ahead, hang with it. One thing I want to show you is it looked like we were in a little narrow red channel here, and the S&P on the 10th and the 11th just blew out over that, even blew out over the top of our little blue wedge here. And on Friday, looks like it wants to bounce here. And I honestly, what took place late on Friday, I cannot tell you if what we are seeing here on the 5-minute chart. Do you remember we had a situation a number of weeks back where our red channel broke. Here it is. And when it broke, we rallied back up to it and then just kind of followed that up like a vine would wrap around a pole. I can't tell you if on a smaller scale we may be seeing the same thing happen right here. The only difference is this lower line right here really hasn't broken, but you can tell that this line is having some kind of gravitational pull. So the question is, coming into this week, whether or not we are establishing a new little bull trend after a portion of a day of bearishness, or are we setting up a bear flag that would send the S&P down at least to test this lower blue line right here? So I honestly, coming into this week, I think the most important thing to watch, and it's a little underneath us, but again, I believe the word should be, this is your decision-making point. This yellow line right here. Now, if you want to try to pick a top, if you tag this red line up here, right around 1600, maybe a little bit above, tag that, and you're happy with your gains, no one could argue with you on that. If we start to plummet through the week and come back down to this yellow line and then break it, then I would say that should be considered at least a short-term sell signal. I wouldn't think it would be long-term, because we got some areas down here that could very easily pick the market up. As a matter of fact, this 1540 line could be an area where we bounce again. If that doesn't hold the market, then 1526 roughly should. And if that doesn't, then we got a line down here around 1488. But for what I'm seeing right now, this looks a little exuberant, looks a little out of control, looks a little getting too far ahead too quickly. Especially when you consider, really, I mean, I know that we're seeing record profits, but you know what we're not seeing? We're not seeing a great deal of consumer confidence. We're not seeing a great deal of real, actual job creation that can withstand honest criticism. I know you're saying, but Jim, we're at 7.6 unemployment. That's better than what it was. It's really not. It's really not. If we had the same sized workforce in 2013 that we had in January of 2009, this is a mathematical fact. If the same number of people were in the workforce today as were in the workforce then, unemployment would be at about 11%. So it looks like 7.6%, but in terms of actual human productivity, it is 11% unemployment. So guys, there's your video. Let's see if these little blue lines here, they could give us a little short-term bounce. But again, the one that I am most concerned with is this yellow line right here. Let's watch this going forward. And finally, I want to say thank you for your time. Thanks for watching this. And if you'd like to subscribe today for daily market updates, all you got to do is go to www.sp500chart.com and sign up. I will tell you this. Where did I go? I went to an International House of Pancakes this past week. A cup of coffee was $2. Buy me a half a cup of coffee every trading day, and I will give you a video like the one you just saw at the end of each trading day with no delay. Now, everybody else gets to see these videos over the weekend. I release the entire week's worth of videos. Why do I do that? I do it because I want to put what I'm doing out there for all to see, sink or swim. It works or it doesn't. I'm willing to do that, and I think anybody should be willing to do that. But if you think that this could be something that you could filter into your own analysis and into your own thought processes, go sign up. It's cheap. Hey, thanks for watching. Take care.